Hey guys, so today I'll be talking about the basics of crypto trading and everything. I'll try to make it fast and easier for beginners. So first of all, I'll talk about the apps I use in trading. Firstly, I use TradingView. When you look at my screen where the cursor is, this is how the app should look like. It's called TradingView. That's the app I use in drawing my charts and marking out my key levels and everything. And me personally, I trade just crypto, mostly altcoins. So you can find almost all of every altcoin you need, not all, but most of them on TradingView. And then the app I use in taking the trade itself. Um, Personally, I use Binance. I use Binance in trading. It should look like this but you can find it on Apple Store or Play Store, whatever you use. And then also, if you can't use Binance, some countries have like restrictions. You can use KuCoin. KuCoin should look like this, or you can use Bybit as well. I've never used Bybit personally, but I see some people say it's just as good as KuCoin as well. These are the apps I use in taking the trade itself. I use TradingView in drawing my charts, marking out my key levels and everything. Then I use Binance and KuCoin in taking the trade itself. I think that's the apps I use. The number one thing we should talk about. Number two, I'll talk about how it works. Well, it's very simple to use. I think you can find most of the stuff you need on YouTube. First of all, you could search up the pair you want to trade. Let's say you want to trade Bitcoin. Personally, I don't trade Bitcoin that much because I feel like in order to trade Bitcoin, you have to go high on leverage, and I don't do that. So I usually trade altcoins with small leverage. They have more chances of either going up or down than Bitcoin at its current price. To get a 10% pump on Bitcoin now is almost impossible in a single day, but you can get that every day on altcoins. So that's why I trade altcoins. You search up the pair you want to trade on TradingView. Let's go to Bitcoin already. You search it up and then you look at the charts. You mark out your key levels. Well, personally, I use 4-hour time frame in marking out my key level. So what does key level mean? Key level just means like it could be like a support, it could be like an order block, it could be like a liquidity, it could be resistance. Key level could mean anything depending on the type of strategy you use. That's what key level means. You mark out your key level on the higher time frame first of all, and then you switch to the 1 hour time frame. 1 hour time frame helps you know what trend the market is on. 1 hour time frame helps you know what trend. So when I talk about trend, I mean if the market is in an uptrend, basically there's just two types of trend, and then there's a consolidating market. Uptrend simply means when the market is making highs, new highs, low and new highs, and then those. What does this mean as an uptrend? Uptrend basically the new high is higher than the previous high, and then the new high as well is higher than the previous high, and then the low isn't as the new low isn't as low as the previous low. So when price comes down for retest or something, it makes a low around the previous high, but not as low as the previous low. That's an uptrend. That means the market is being bullish, or in a bullish trend. That's when we say okay, we're in an uptrend. But then when the market breaks that trend, that's when we talk about a change of character. Market isn't an uptrend anymore. Now it's currently in a it could be a downtrend, it could be consolidating here for its next move, but then there's a structure, the uptrend has been broken. And then when we're in a downtrend, the downtrend should look like this. When market goes down, it goes up, and then it goes down. That's the opposite of an uptrend. The low is lower than the previous low, and when it makes a new low, it's even lower than the previous low, and the high isn't as high as the previous high. Market keeps going up and down. Let's scale into these charts here. We could see market doing this here. A high, at a low, a high around there, a low, and then it just keeps going down, and we could see it clearly. Yeah, a high, a low, a high, a low, high, yeah, low, and then it just keeps going. That's how we mark out the trend. What trend are we in? Is it an uptrend? Is it a downtrend? This helps you, look for what you're looking for in the market. You don't just go into it expecting the market to pump today or dump. First of all, you mark out your trend, you mark out your key level, you mark out your whatever you trade with. If it's candlesticks, just like this is a candlestick on the charts. Each of this is a candlestick. um you trade with either pin bar, you could trade with doji candle for confirmation, you could trade with and bullish engulfing for reversal, depending on how it works for you. But there are different candlesticks. You should study that as well if you're beginning to trade. That's very important. And then I use the 5 minutes time frame, or go to the 5 minutes time frame. I use it to look for entries. I'm also more of a scalp trader, so I hope you understand what that means. That's like I'm just in there to make money within a few hours. I'm not holding trade for a long time. That's what scalp trading means. Like talking about break of change of character, like in an uptrend, we could see markets about Griffin. I talked about Griffin on Tuesday on the first video I made on YouTube. Now we could see market trying to change. The character is changing. Yeah. So basically, the low, it's almost as the new low is almost as low as the previous low. So this could be a bearish signal. It could mean that the market is about to change. It's no longer going up and low and up and low and up, and now it's having a change in character here. But I don't want to risk it taking the trade here. I need some more confirmation, and that confirmation, you can use the 5 minutes time frame to get the confirmation you're looking for. Most people use the 1 minute time frame. That's really bad. That's really bad. I feel like get more better confirmation. The 5 minutes is better. If not the 5 minutes, then the 15 minutes as well. But 5 minutes is a lot more better because you can easily enter the trade before it gets you know before it moves. And also about entry, I'll talk about entry and about stop loss and about take profit as well. Entry, your entry should be around depending on what strategy you choose to trade. If you choose to trade on support and resistance, if you choose to trade other blocks, if you choose to trade fair value gap just means like a place where there's an imbalance, where price pumped from and it never came back there to fill it up, and price continued. That's fair value gap usually comes back to get filled. Like when you look at here, price had a fair value gap here, it pumped and then it came back here, it filled it up and then it tried to pump up, but then that's a resistance here, and then price dumped back into it. That's a fair value gap. I think this is something you will understand along the line, but it's not that important right now, as if you're beginning to trade. And then entries, you look for entries with with lower time frame. The 5 minutes time frame, it could be a liquidity sweep, it could be a bounce on the key level that you marked in your higher time frame. Let's say you marked out your key level on the 4 hour time frame. When you look at here, you see price came here, bounced on this support, bounced on it again, and then broke. Then it became a resistance. I'll talk about support and resistance. Support and resistance just simply means a support is where the price, it's reacting from. When it gets there, it usually bounces off. When it gets there, it bounces off. That's a support. It's like a floor where you're bouncing from something. You don't fall in. You don't fall inside, or you don't fall in it. Like you bounce up from there as well. Whenever you get there, you bounce off. So if we use this 4 hour time frame, we'll see our support is clearly on this pace. When price came here, it bounced off, and then it came, and then when it broke, it became a resistance. Price continued to sell. It came back here to reclaim that support, but price continued dumping again, and then when it came back here, it broke above that resistance. Now this resistance now becomes a support. Price came back to break it. It couldn't break it. It went back up. But when you use a 5 minutes time frame, you could get the move earlier before it moves. You could get in the trade before it starts the move, when it's on the support or when it's on the resistance about to break whatever you trade. You use the 5 minutes time frame to get in the trade earlier before the move happens. That's the reason for trading with the 5 minutes. I've explained the trend, I've explained the support and resistance, I've explained the entry. And then for stop loss, You see, stop loss is way more important than how people talk about it in trading. Stop loss prevents you from losing your entire, account. Let's say you're trading with a $500 account, or 1,000 or $10,000 account, whatever you're trading with. Don't forget to put a stop loss. Don't take a trade and just leave it hoping that, oh, it will go my way. Let's say we're trading here, and then we'll put our trade to go down here. Stop loss basically means, okay, I don't want this trade to go above this other block, and I don't want this trade to go up. When it goes above this other block, it becomes a change of character. Sometimes it could go above it, but then it's just a fake out, and then it continues and moves downward. But then the stop loss helps you prevent losing more than you should have lost. Let's say you leave the trade without any stop loss, and then price goes back up there and takes you out. The whole account is gone. But when you have a stop loss in a $200 account, the stop loss shouldn't be more than 10% or 20% of that account. You can just lose 20 euros and just leave it there. Don't try to adjust the stop loss. Don't try to, oh, maybe this trade will change, maybe this trade will continue, let me adjust my stop loss, let me take it down a bit, let me take it up a bit. No, it should be logical. If you're taking off your stop loss to adjust it, it should be a logic reason. Okay, maybe this trade hasn't fully hit the support. Not even a maybe, you have to see like some confirmation on it. You have to be sure that, okay, this is the reason why I'm taking out the support. Maybe it's just going for a liquidity sweep, maybe it's just going to grab liquidity, maybe it's just going to fill up a fair value gap and continue. That's the reason you should be thinking of changing your stop loss. But never just change your stop loss out of emotion. You're going to lose that account. I assure you that you will start afresh. Yeah, I think I've talked about the entry, the support, the resistance. These are the basic things you should focus on when you think of starting trading. And then we'll talk about indicators. Personally, I don't use that much indicators myself, because I feel like most indicator, they show you the move after it already happened. But when you look at the chart, I feel like maybe with time, when you look at the chart and consistency, you'll see most of the things you're looking for. If it's a support, if it's a resistance, if it's your liquidity sweep, if it's whatever you're looking for, other blocks, you'll find it on the charts, even without using indicators along the line. Well, if you decide on using indicator, I think EMA, which is the potential moving average, is an important indicator. It helps in telling you about the trend. If we're in an uptrend, if we're in a downtrend, if we're in a whatever trend we're going on, it helps. And then the volume, I use the volume indicator as well to trade. You just go here, you click on it, you search up the indicator you want to use. I use the volume indicator as well to trade. It helps me, when, let's say we're in an uptrend and then price gets like a spike. Most times I trade the spike in volume. When price get a spike, I expect some sort of exhaustion in the market, and then I could look for like an entry to go to the short. If it gets the spike around the key level, let's say about around the resistance, I expect price to do a bit of a cool off before we enter a short, or maybe we enter a long again for continuation, whatever the market is giving to us. So the volume indicator as well is very important. The EMA helps you for the trend. If you're struggling with identifying what the trend is, I think those two indicators are very important. And then RIS, I've not used the RIS in a long time, but I think it's also good for beginners. It helps when a market is being oversold and it's been overbought. Oversold, that means it's been dumping for a long time, and we expect some reversal around the zone, and then overbought is just the opposite. Market has been bullish, and then we expect a bit of a cool off from it. That's what the RRS indicator helps with. And then you can also search up some tools like the support and resistance by Lux Argo. I think they have a good support and resistance indicator. I used it when I was learning how to trade as well. You can also use Chart Prime. You can search it up on the indicator. You look for Chart Prime. The indicator as well is good as well. Also, then I'll talk about risk management. Risk management is very important. Trading psychology is even more important than being a trader itself. You see, most people just go into trading thinking, oh, I want to make $1 billion, I want to make $100 million. Get that off your mind. What you're there for is consistency. What you're there for is waking up every day, just like going to school. Oh, I'm in nursery 1, I'm in nursery 2, I'm in primary, I'm in secondary, I'm in university, and you just keep getting better at it. You don't just go there just looking for quick money. If you're looking for quick money, please stay away from it. You're going to lose everything you have. Just stay away from it. So you use it's the mindset. It's more of the mindset. You're there to learn. You're there to get better. You're there to, to build a character, I would say. And it's not just something that you just wake up one day and you're looking for $100 million. You can't get that in trading. You're gonna lose it. Even if you get it luckily, I assure you will lose it someday, because the emotion is going to kick in, the greed is going to kick in someday. I share the risk management file in the Telegram account. You could check it out in the file page, this thing on the Telegram where we post the trades. I think you can find it there. If you don't find it, you can write me. I'll send it to you personally. Risk management as well. I only take trades from few pairs. Don't go looking for so many pairs. You're trading Bitcoin, Ethereum, altcoins, this one, futures. I suggest looking for few pairs. Study the charts, backtest them. Backtesting, which means going back in the previous years, or going back in the previous months to look for what the chart did. Okay, this is similar to what might happen here, and the chart looks alike. That's backtesting. I suggest you just focus on a few pairs. You could just be like 3 or 2, and when you don't see a trade or a setup in those pairs that you trade, just stay away from the market. You must not trade every day. It's not something you have to do every day. It's not a hobby. You only trade when you see your setup building up. When you see your setup, you see the confirmation, not just see your setup. You see some sort of confirmation in that setup that you're looking for. The confirmation could be like, breaking the resistance, holding above it, or, liquidity being swept, and then, everything just depending on what you use as your confirmation. It could be another block being formed. Like here, we could clearly see another block here, and then price continue dumping. If I was going to trade this, wait for some confirmation of price not being able to push above it. Some people will just go and enter just randomly because they think price will dump, and then price doesn't dump here, and then they get taken out. But then this narrative now, which is the candlestick here, it helps us for confirmation that okay, now we're going down, so we can take a shot from here. It might not work every time, but at least the chances of it working is better than just trading randomly. Just I want to enter. That's really bad habits. And then also in the leverage, this is very important. If you're beginning to trade, I would advise staying away from futures trading for the meantime. I would advise staying away from leveraging. The best thing you should go on with is spot trading, which is it's also on Binance. It's also trading altcoins, but the spot version, which is SPOT, not the spot playing football. The sports, which is on Binance, selling of it, the same thing. I think that helps you, build your character, build your confidence as well in trading. That helps you, start up from somewhere before you go into leverage. And when you go into leverage, don't exceed 3x, don't exceed 3x leverage, don't exceed 5x leverage. Personally, I usually use 5x to 10x, but depending on how good that setup looks. But if you're beginning to trade, I would advise you just stick with 2x, 2x, 3x. Don't even go up to 5. Takes months, take years before you could get there. Take it easy, take it like a process. Treat it like a business. You don't want to just lose your capital because you're looking for more money. No, when you lose your capital, the next day the market still continues without you. Have that mentality that you're here to protect your money. You're here to protect your capital. You're not here to lose it. You're not here to give it to someone else in the market. That way, to help you build that, and to help you build that mindset of not rushing into anything and not wasting money in the market. What else? I think I've talked about the most important things here. Also, adjusting your stop loss to break even. In my Telegram channel, I mostly say adjust stop loss to entry. That simply means when price has hit your take profit 1, or hit your take profit, wherever you put as your take profit, your resistance, wherever you put, okay, this is where I want to TP my price from, I want to take profit from in this trade. Make sure you adjust either your stop loss to your entry point or to at least profits. If you're in a $10 profit, adjust your stop loss to like $2. So even if price goes down, you don't lose everything. You still get $2 from the trade. That's where you didn't lose the entire trade as well. You got something. And also taking profits is important. No one went broke from taking profits. I don't care what people say. Oh, you have to hold the trade. what you're there for is looking for money. You're not there to hold some shitty ass coin. You could get rooked in a minute. You could get, they could bring up a news or something that just spoils the whole trade in few seconds. So make sure you take profit when you say it. It's just as important as opening that trade you're opening. What else am I supposed to talk about? Yeah, I think these are the most important thing to focus on when starting to trade. Any other thing you can ask me. I think I can pull you through. And that's I've talked about the indicators, the key levels, the pairs I trade, the risk management, the candlestick as well, the entries. So I think this is everything you need for the as a beginner trading. Any other thing you want, you can always hit me up. I'll do my best to explain it, and it's basically free money just with knowledge. So there's no need hiding it for all my bros. So I think, yeah, this is the end of the video. In the next video, I'll try to talk about the trades we took this week. This video is already long, so in the next video I'll talk about it there. I hope you guys check it out too, and yeah, thank you very much for the support and everything. I really appreciate that. I really appreciate it. I see a lot of my friends posting it on their WhatsApp story, Instagram, everything. That means so much to me. Thank you guys. And yeah, just all you just have to do is follow my setup, my trading, everything. You don't have to do too much. If you just need to know how to enter the trade, where to exit the trade, and when you miss a trade, make sure you don't just jump into another new entry. No, when you miss a trade, just let it go. The next setup will be better than the previous one. I think I said this already. Don't just jump in because it's going up, I might miss out. No, you missed that boss already. Just let it go. Another one will come. That's how life works. A better setup will come, if you understand. So thank you guys very much. I hope to see you guys in the next video explaining it as well.